Hi, everyone. I'm שולי Galilee. I'm a founding partner at Upwest Labs. We're Silicon Valley-based pre-seed and seed fund investing in Israeli entrepreneurs looking to break into the U.S. market. I'm very excited to be here and welcome our panelists. Please come over to the stage, and we're going to have each and every one of you start. We have about a very short time, actually, for the number of people on the stage, and we're going to try to cover a lot of grounds because I think this is a really timely conversation about investments, both in Israel as well as globally. And we have a very, very diverse panel with a lot of great perspectives, I think ranging from you met Yifat from the banking industry, as well as corporate venture industry, late stage, early stage, and new forms of vehicles investing in innovation and technology in Israel. So I'm going to start with you, Ken. Hi. Please, in one sentence, each of you introduce yourselves and what your firm is doing, and we're going to then go into the conversation.
Hi, I'm Ken Bronston. I'm with Hearst Ventures. We're the corporate venture arm of the Hearst Corporation. We're a very active media and technology investor investing in the U.S., Israel, China, and Europe.
Hello, my name is Sivan Shamri Dahan. I'm a partner at Kumra Capital. Kumra is a late-stage fund out of Israel, investing in growth companies. These are companies that have annual revenues of $10 million, have already validated product, have sales, have a marketing team, and we invest in the next growth stages in order to bring them from these revenues to revenues that can already take them to an IPO.
Hello, everyone. Nadav Tzafrir. I'm one of the founders of Team 8. We've been around for the last 4 years. We actually don't invest in companies. We start them from scratch. And so far, we've started 4 companies and now working on number 5.
My name is Eric Gurtler. I'm the chairman of U.S. News and World Report. I'm also the CEO of a growth stage fund called Ulysses, and I'm also a trustee in the Zuckerman family offices. I guess I'm like a millennial. You can't just have one title anymore. Our focus in Israel has been on later stage, and where we've done early stage, we've done that through venture capital firms in Israel. But most of our effort has been through philanthropic projects, particularly in the science, to help increase sort of collaboration between Israel and the United States.
I think we spoke about Lumitek enough today, but Lumitek is the subsidiary of Bank Leumi dealing with technology banking, and hopefully, other than being the bank for all the startups, we want to be the bank of all the VCs. So this is why I'm sitting here.
Welcome, Yifat. Can you hear me okay with this? We're going to start a little bit kind of high level in terms of the investment environment today and in the last year, and then we're going to take it down a little bit more to what we're seeing and looking into the future. But I think 2017 saw a record year in VC investments, and I think everyone is talking about the fact that, you know, and other speakers talked about it before me, about the amount of capital currently in the market. And 2017, we saw a record year in VC funding of $148 billion. But what we also saw is that most of the capital went to fund already high-valued companies. And we've seen also fewer VC transactions, yet the deal sizes have gone up. And I think we've seen it at the early stage, deal sizes going, you know, really, really to big numbers, as well as in the growth stage. And obviously, late stage, we've seen huge deal sizes, but very, very few of them compared to previous years. So I think, you know, looking globally, primarily, I want you, Ken, and Sivan to address this phenomenon that we're seeing in 2017 and thinking about what drives this, as well as, you know, how should founders think about financing their companies, seeing that they're staying private longer?
Well, I think in 2 words, the answer is the Softbank Effect. And large funds have to write large checks, and everyone knows how big SoftBank is. And they've been in the market, along with others like NEA, writing very large checks, and they've been calling the winners. In other words, this is a market, I believe, in many areas where there will be one player. There will be one player, the winner gets all, or the winner gets most. And so these firms, these investment firms, are declaring the winner. And I was just talking to a company last week that wants to raise potentially $20 million, and the SoftBank firm approached them and said, what would you do with $200 million? I mean, that's what's going on, and that would be the end of the game. They would win, and they would go off. So I think that's going on. I think it's good for some and bad for others, of course. For entrepreneurs, there's still a lot of money out there. It's not that the money's gone away, and certainly not most of the money is in these big deals. Maybe a third is $100 million or more. So there's still a lot of capital out there. And the advice I give to entrepreneurs all the time is get to know VCs early. Get to know them before you need the money. Get to tell them about what you're doing. Take them along for a ride for a year or so, and then ask for money. And so building that long-term relationship and getting to know VCs and being able to tell your story well, I think we'll still end up in a good outcome. It's not that there's no money out there, but it's certainly shifting towards the high end.
Sivan, you're in the growth late stage. What do you see, and what does it mean for you? I mean, the Softbank Effect.
So let me just start by mentioning some numbers, because we are seeing a huge change within the Israeli market. It was mentioned here before that in 2017 was a very significant year in terms of fundraising, 5.2 billion. Out of it, 1.6 was actually directed to late-stage deals. Now, this is almost sevenfold of late-stage funding since we actually were fundraising for Qumran 1 back in 2013, when only $240 million went into late stage. So definitely we're seeing a huge trend in the market, but really the reason for it is the maturity of the market, is the fact that we have many more entrepreneurs today that not only have the motivation, but have the capabilities of taking companies all the way. We have the early stage investors that have today much more appetite to build larger companies, and have also the patience to put aside the follow-on financials in order to support these companies. And we see more and more late-stage companies that are fueling these companies and providing them with another stage of unprofitable growth that they didn't have before. And so definitely Israel is influenced by the global trend of companies staying private longer and building themselves towards much larger companies today.
Thank you. Yifat, do you want to add something here?
Yeah, I think one should look at the situation. We used to be blamed for selling too early. This is something that, you know, all of us, I think, in the room, we have been meeting with, you know, investors from outside of Israel. And I think everybody needs to consider the fact that the Israeli ecosystem, the tech ecosystem, investment ecosystem is actually very young and shouldn't have been compared to the American market. And there is some kind of a, getting more mature and having more paths and more types of investments in the market. And the reason people had to sell earlier was because they can either go public, and if the public wasn't open in the public markets and nobody bought them, you know, they were in a big problem because we didn't have growth funds, like Sivan said 4 years ago. And I think in the last 4 years, we actually matured as a market. I think we have more than we can anticipate it 4 years ago in terms of growth. We actually have a very active secondary market, which also releases a lot of the pressure of the entrepreneurs, so they can release a little bit of their position. And we also have banks who are starting to actively deploy what I believe is big chunks of money that actually support the company's growth and not interfering with any of these types of investors because we're not diluting anybody. And this obviously allows for higher growth.
So 6 years ago when we started Up West, you know, very tiny, small fund and looking into, you know, what kind of model are we going to be, how are we going to fund early stage. Today, you know, we're seeing a whole plethora of opportunities for entrepreneurs to get funded, you know, from crowdfunding to debt financing to early stage angels. Some would talk about ICOs as well. And then the platforms to continue and fund innovations are, you know, diversifying. And I think for the entrepreneurs, it's quite interesting to look at it and think, you know, what is right for me? Nadav, I want you to talk a little bit about why you decided to go and start a platform that is not a traditional venture, yet, you know, goes and provides value to early stage ideas.
Yeah, so first of all, just to lay back on something that you said before, Ken, if that company that was offered the $200 million doesn't know what to do with it, I'll give you my card later. Maybe we'll find what to do with the $200 million. On why we went to and started something which is differentiated, I'll say the following. I think there are trajectories that are in their intersection creating a lot of frustration for early stage investors. And I think from one side, what we're seeing is that capital is abundant for many reasons. You know, when I talk about money, I have my favorite banker who's to my right here. So I don't know exactly why it's happening, but it's abundant, and so that's one thing. The other thing, and that comes from the same trajectory, the cost of entry has also has plummeted, as you know, is decreasing. Sorry. All you need is a laptop, a good connection to Wi-Fi, and a credit card, and you can start a company. And so on the supply side, we're seeing, I don't know if plethora even is the right word, right? Like we're just seeing an abundance on the supply side. On the other side, which I think is a contradicting trajectory, we're seeing complexity rise dramatically. So the problems that we're looking for, apropos what Yifat was saying about really solving big problems like life on Mars, we're seeing more complicated, complex issues that we need to deal with. At the same time, the pace of change has accelerated to a point where I think early stage investors don't have the luxury to even look at the whole cycle before they make their next decision, because you can't even look at the preceding company hasn't come to fruition before you even know what happened to it. And so your data sets are also very limited. And if you look at these two trajectories intersecting, what you're finding is the old model, or I don't want to call it old, the conventional, straightforward investment early stage model really in many ways doesn't make sense anymore, right? And so I'm not an investor, and I've been in this industry for a short time, but this spray and pray model, which we all have come to understand and it just doesn't work anymore. And so what we're seeing is early stage investors getting frustrated and just giving up altogether. And that's one of the reasons that we're seeing more money in growth, because how can you choose? You speak to early stage investors, they're like, everybody's telling me the same story. You go to RSA for cyber, for example, you'll see 10,000 companies in 10 different verticals, all have the same narrative. How do you choose? in that environment, I think it makes sense to come to a new investment model where I think that the agnostic, conventional VC model will be replaced with a more focused technologically value-add model. And each company will, each investment firm will find their own differentiation to attract these investors. Some might say, look, I'm just focusing on this specific technology and I'm going to research the hell out of it until I have my own theory and my own narrative and I know what I want to solve. That's one option. Another option is the Softbank option, which is like a the prophecy that they make happen, right? I'm going to put $200 million and I'm going to make it the winner just because I put $200 million. Others are going to do the A16Z model, right? They're going to bring value through their, bringing business to their companies through their executive briefing centers. And we're seeing more and more of these. We at Team A just took it to the extreme. We said we're going to pull all this together. We're not going to have any deal flow whatsoever. We're going to start not with listening to entrepreneurs pitching ideas or solutions. We're going to start with really researching what we think the next problems are going to be. Not the ones that we see today, just the ones that are around the corner. Once we understand the real problem, can we put together the resources, the people, the capabilities through a process that we've built? And then finally, we'll also put the early stage capital to make it happen. And so it's like, we have one the old saying, like, you don't put your eggs in the same bucket. We are putting our eggs in the same bucket. But we're lowering dramatically we're making the probability of success should be much higher.
So many would say the VC model is being disrupted by all of these different platforms. Do you see that venture capital is forced to, structure itself or operate differently than what traditionally was happening before?
I would say that the VC model was, since the very early days of the 19th and the Yozma project, brought life to the startups market. It still is the heart and the foundation of what we call today the startup nation. And I think that it will remain the basis of this industry for the foreseeable future. However, what we do see is the health signs of a fast-growing and vibrant market, and also a more diversified market. So if before, most of the Israeli companies, the more successful ones, were deep technology kind of companies, semiconductors, communication infrastructure, heavy enterprise software kind of companies. Today we see many more B2C companies. We see marketplaces, media and internet companies that we didn't see before. And actually, the idea before, as Yifat said, was that Israeli entrepreneurs cannot lead this kind of companies and definitely cannot make big, significant companies out of them. And so I think that today, with the variety of companies, simply one suit cannot fit all. And we see different kind of funding options. Some of them are the crowdfunding that you've mentioned, specialized accelerators. Angels are taking a bigger chunk of the seed financing. And so marketplaces or B2C companies that actually need to prove some traction when they come today to round A investors have the additional fuel to bring their companies a few steps forward before actually opening the door for the traditional VC model.
I actually I think differently, and I'll give a few examples. We every once in a while there is some new fashion, and then we have crowdfunding fashion and all kinds of other fashions. And then what we're seeing is that at the end of the day, they're all going back to some kind of a format that's very, very, very similar to VC. Why? Because the VC model has been working for 40, 50 years. And at the end of the day, when you do a full cycle in all kinds of funky new types of investments, you hit all kinds of things that you didn't think about, which the VC has already thought about and have fixed in their model. And you end up coming back to crowdfunding that have VC funds under their structure and angels that are formatting their investment vehicles into VCs. Why? Because it works. So I don't think VC model is done. Personal.
Eric and Ken, I wanna bring it to you. You both invest globally and invest in Israel, and we've seen an influx of corporates and investors, coming into the country and investing in all stages and looking to, continue and fuel innovation with capital. So, Eric, when you evaluate, investments in that ecosystem in Israel, how do you look at it as a foreign investor, and where do you see the opportunities and the challenges in the ecosystem?
Well, first of all, I agree with a lot of what you've said. Interesting, no matter what the model is, when I worked for Mayor Bloomberg in New York, he had a saying that was, money follows talent and not the other way around. And so, Israel right now is producing great talent in so many areas. So the money will continue to flow. How it gets structured is almost less important. The interesting thing or the tough part for investing from a foreign, from another country, is how quickly the ecosystem is maturing and developing. There's a joke that many years ago, President Nixon turned to Golda Meir and said, I'm very impressed with your military. I'm just really tired of our military. Can we trade? Can we trade 3 generals? And I'll trade you 3 generals. And Golda Meir said, deal. I'll trade you some of my 3 top Israeli generals, but I want 3 your generals. I want General Motors, I want General Electric, and I want General Dynamic. Now, that was at a time when none of those companies were in Israel. And even for those of you that saw Prime Minister Netanyahu's speech at AIPAC, you go back 10 years ago, and only 3 of the top 10 valued companies were in Israel. Today, you go back and you look at the list, 8 of those 10 most valued companies are in Israel, including Amazon, Facebook, Microsoft, Google, you name it, in most of the industries. And so I think from my perspective, when I look at sort of investments that we're making, it's very hard for us to be on the ground and make early stage investments. We're not there to look at the companies. We'd rather invest with early stage venture capital firms that really know what's going on. When we look at later stage, we're looking for those partnerships. We're looking for those firms that have developed the right partnerships, that are working with the right research groups, that have come out of the right universities. All of that maturity in the ecosystem, those partnerships are extremely important for us. And then also, when we look at things, we also want to make sure that, as these companies grow, they've got to grow outside of Israel. And we want to make sure that we can be value added, certainly in the United States, as they look to the U.S. market.
Ken, do you want to talk a little bit about Hearst's involvement?
Sure. Well, first of all, I'd say, when you talk about foreign investors, I sort of feel like we're so close to Israel. We're so close to Tel Aviv. It's almost like another borough of New York City, in the way that people move back and forth and back and forth. It's almost seamless. So it doesn't feel so foreign to me, number one. But, Hearst's approach to corporate investing has been to build a global presence. Where, as I mentioned before, we're in China, Europe, and Israel, here in the United States. And the concept is to pick the best of breed no matter where it builds. And there are people in the United States who believe only innovation occurs in Silicon Valley. How wrong they are, everyone knows that. And we find great companies coming out of France and coming out of China. And what we want to be able to do is find the best entrepreneurs and the best companies and the best business models. I think in order to do that, you really have to be on the ground. That's why we opened an office in Tel Aviv. Not only do we want to know what's going on in the market, we want to show the Israeli entrepreneurs that we're truly committed to that market. And I don't think you can do that from afar. I think you want to wake up and have breakfast there and so on and so forth. So that's our approach, is to build that office, get to know entrepreneurs very early. And the fact is, with all the money in the Tel Aviv market and the Israeli market. If you don't get to know these companies early, you'll probably miss out if you show up for the Series B or Series C. So early is better, and we're trying to strengthen our presence in Israel.
Excellent.
Thank you.
I want to take it to a different direction and talk a little bit about kind of 2018, what we all see in terms of opportunities, actually, innovation coming out of Israel specifically, but I think also globally. We, at early stage at least, we try to, identify trends and see where things are going in order to kind of understand a little bit better where are the opportunities at the very, very early stage. And we see a lot of hype cycles that, in the last few years drew a lot of capital into them. I think cyber continues to lead as a domain that is interesting for a lot of people. Nadav, is cyber over, or is it still a place to continue and look at investing?
Cyber is changing. I don't think it's over. I think it's changing. The very trivial truth of it is that as the world gets more hyper-connected, the attack surface grows exponentially, creating a lot of opportunities for attackers. So I don't think cyber threat is going anywhere. On the contrary, I think it's going to become much bigger. We're just seeing it going from, from fraud to things that are more sophisticated, and now we're seeing it even, at the very heart of what it means to be a modern civilization, right? If you think about electricity and our financial systems and our political systems. So the good news for those of us that are invested in cyber is that it's not going anywhere. The bad news for those of us that are living on this planet is that it's becoming more serious, and I think it's going to get a little bit worse before it gets better. The reason I think we need to change it goes back to what I said before. I think that the companies that are going to make it are going to have a combination of, first of all, real tech. I know that, there's these cyclical things. We said Israelis have good tech, but they can't do marketing and sales. And so now a lot of us are learning to do marketing and sales. Don't forget that you can fool some people sometimes. You still need really great tech. And some of the technologies that we're looking at right now are really complicated and deep. I mean, one of the things that we're looking at, for example, right now, trying to go a leap forward, is think about what happens in a world with the reality of quantum computing now, and start building the encryption that withstands quantum computing. Now, that's a very deep tech stuff. Yes, you need to marry this with the real use case. And so what we're doing specifically right now, and that's how cyber is changing, we're not coming from where the attackers are coming from, because the attackers are not going away. They'll become more sophisticated. They'll use AI. They'll do this. They'll do that. What we're thinking about is what are the use cases that can as cyber as an enabler, so that you don't come with cyber and say, look, buy me, because otherwise you're going to be screwed, but rather deploy this kind of a new paradigm, and you'll be more competitive, and you can move faster. So if you go into concepts of homomorphic encryption, for example, which basically means that you can encrypt data but still query it in an encrypted query, you can overcome not only privacy problems, but interconnectivity with digital health systems. And so I think the cybersecurity companies that are going to make a big impact and a real change are the ones that are going to understand not only where technology is going, but also where the business and the industry is going, marry those two together, and that's where the future of cyber is.
Ken, you've seen the transportation opportunity growing globally, not only in Israel, and you've done a couple of investments in there. Is this something that is going to continue? You think we're going to see more capital going into funding mobility and transportation related ventures?
Yes, so far we've funded 2 companies in Israel in the automotive space or transportation space via, hopefully everyone got here via their Via today, right? Everyone? We'll take it on the way home then. And Autonomo, which is a connected car. But I think the transportation revolution has really just begun, seriously. If you look at the 4 main drivers that are going on in transportation evolution, it's electrification of cars, right, has just begun. Connected cars and all the things that come from that and all the data that emanates from that is just begun. mobility. We've seen a lot of changes in the world of mobility, and with Uber and others, but there's a lot more coming down the pike. And so there's so much more to transportation, and it affects all of our lives, right? It affects us each and every day. So I think there's a long play here, and very fortunately, Israel's got some excellent resources and capabilities in that area. And so I think we're in inning 1 or 2 right now.
I think we got the signal to finish, and this is without talking about blockchain and all of that hype that is going on. So I want to thank everyone, and thank you, panelists, for your insights. I think we tried to cover everything in a very short time. Thank you so much.